Hello and welcome. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is June 2nd, 2020. I'm going to get to three topics today as it relates to what traders are watching, what's impacting the markets, why markets are moving, and sort of the headlines underneath as it relates to what really has a net impact on markets at this moment. Let's get right into it. The US-China relations is an ongoing topic that I'm going to continue to report on because it has a true net billion and trillion dollar impact on the U.S. economy and economies around the world. And that's what the market is really paying attention to. In fact, this weekend, there was a much reported in state China news reports that they were going to suspend their agreed purchase of soybeans on this past Monday. And that was the anticipation of what Wall Street was paying attention to, what truly mattered in the sense of did the trade deal that was just newly struck and signed into, agreement early on this year, would it be honored and continuing to be honored on an ongoing basis? Well, as I've described, the rhetoric or the words that are being, spouted back and forth negatively and being reported in everyday headlines as our relationship deteriorates, the actions are more important than the words. And I want to keep bringing that to the forefront because that's what the markets are paying attention to, right? Looking through the headlines. In this particular case, it was reported that China very specifically said that they were going to halt the purchase or the initial agreement, if you will, of soybeans, one of the components to the trade deal. And that was going to happen this last Monday or yesterday. In fact, what we had reported yesterday is that despite all of that reporting and threatening, if you will, those purchases did take place. So this is an ongoing love-hate relationship that's going to really have a net impact on the marketplace. But the words at this moment in time, seem to have sort of bigger headlines than actual actions themselves. I think the actions will clearly speak for themselves as to sort of the stage of the relationship. But at this moment, sort of everyone's keeping to their word at this time. So let's continue to monitor the situation. I'm going to continue to report on it. But overnight, we had some at least good things happening in terms of that relationship going forward. Topic 2 today is oil. Oil's up. We just came off of a crazy few months in the oil markets, something we've never seen before, historically speaking. And now, OPEC just announced that all of the partners are going to continue to reduce their output. So again, it's a supply and demand issue. Everyone's going to sort of hold on to not flooding the marketplace with additional supply. But keep in mind, we might see oil up not only next few months, but year over year. I think quite a bit, and there's some good factors even in the short term that would support this base case, historically speaking. Right now the U.S. is just now going to the hurricane season. Well, that's always been historically in the summertime a threat to oil and oil prices, plus driving demand as the United States reopens and as travel, specifically on airlines, especially international travel, is almost non-existent this summer. Driving demand is, people have been in their homes for quite some time, and families going to have the kids, want to take that road trip, and so domestic travel is going to be huge. So driving demand will, I think the market is seeing through that, right? And that's another supportive of the oil markets on a short-term basis for long-term pricing stability. So we've got the sector rotation building inside, which is very constructive. It's positive, meaning that the leading sectors that brought us, from the March lows, if you will, think technology, still have to wait for the financials and the energy. And energy and specifically financials are now supporting sort of this rotation. And that's positive and constructive as we see the S&P 500 hang out around the 3,000 mark as it is right now. And so the longer we're here, the more positive it is. We could see a lot more volatility ahead this summer. I mean, that's almost a given the world that we're in right now. But in the short term, there's some positive things happening underneath as to why the markets are continuing to sort of have pretty good days and weeks. Now, our final topic of the day, could this be, and only time will tell, the shortest, deepest recession almost since the Great Depression, if you will, in terms of all the economic data that has just come to a screeching halt in the month of March and April. but we're seeing a lot of signs of high frequency data, signs of life in every facet of the economy, which is what the market is seeing right now. But that being said, when we're technically out of a recession, you don't really know, but typically it's somewhere between when just after initial claims of unemployment peak, and then you have continuing claims peak. So we've seen initial claims peak. That was mid-March. We were going to see continuing claims go, and that's the key right here, which means all of the policies that have been placed out there, for the small business owners, the PPP, Paycheck Protection Program by the SBA, passed by Congress, to get those employees back off the unemployment and back to work in America. So we want to watch these two, the initial claims and continuing claims. Again, we're going to see those numbers later this week. And that's what the markets are watching and paying attention to. So, there's a lot to digest. I appreciate you spending time with me, and stay safe and God bless.